The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. 2 days until Christmas. You got about 48 hours. We'll make it 36 hours. Really, you got about 24 hours to get that Christmas shopping done. You better be done by tomorrow. We got a half day in the markets tomorrow. We got a full day of trading today, and we get some GDP data. As we got the economy, why not? Let's kick it off. 4.3% growth rate. Now, this is delayed data. This is Q3 data, and we're about to hit January 1st. But yes, you get a number of 4.3% growth. Now remember, okay, before we go into these charts, do you remember the radical drop-off in Q1? Okay, you got a negative print in Q1. One of the things not getting talked about in any of these conversations on the GDP right now is that when you got that negative print in the beginning of the quarter, okay, Trump caught a lot of flack and, pull up the programs, folks. I said, he doesn't deserve the flack there, okay? Because what was going on was everybody was bringing in the imports, right, ahead of the April tariff days, okay? You bring in those imports offset the GDP. They are subtracted. The imports are subtracted. So what that did is that drove the GDP numbers down tremendously at the beginning of the year because you had all of these imports pulling forward because who would want to wait until after the tariff deadline, right? Any company pulled forward as much inventory as they could. That subtracted from GDP, okay? And what happened? We pulled forward that inventory. Now, some of that, so then what happens is you don't get as many imports right after the tariffs, right? People pulled forward that inventory ahead of the tariffs, and then they don't have as many imports for the next 3 to 6 months following. What does that mean? Now, these numbers are good, but keep this in mind because this was part of it. I said, man, Trump is getting too much flack for these negative numbers, okay? And he may be getting too much credit on the 4.3 side, and really that's where it goes to the Fed. So we'll see where imports, exports, not getting talked about. We'll dig into the numbers, but keep that in mind. Remember, this negative print had a lot to do with imports, with companies pulling forward the inventory they needed to avoid getting caught up in the tariffs. So then what happens is you have that inventory pulled forward, and then you don't have the imports for the next quarter or two or three, depending on how much they could pull forward. Remember, Apple was like renting boats, right, to bring over as many iPhones as they could before the tariffs got slapped on any product from China. Who knew what the world was going to be? Go back to it. Nonetheless, right, less imports after those got pulled forward. That would be less of a detraction from the GDP. Nonetheless, we get some strong numbers. The GDP comes in at 4.3%. 3.2% was the forecast. Yeah, picking up from 3.8% to 4.3%. That's the headline number. And yeah, consumers doing well. On top of that, and there's your S&P. Good news is bad news in this market. Good news is bad news in this market. Now, you jump around to yields. There's the move, right? You get the 10-year right now down by 6 ticks, but really we're down about 10 to 11 ticks. We were at 112.16 coming into that news, and we have lower price and higher yield. I'm pulling up the yield right now to be exact. We came into that number at about 4.15, and we're sitting now at 4.19. Okay, 4.19 on the 10-year. We jump over the dollar. Yields hadn't moved that much, and boy, we have gold all-time highs overnight, right? I'm getting texts at 2 in the morning, folks, okay? Now, I mute my phone on the overnight, but 2 o'clock in the morning, I'm getting texts from business associates, friends, talking about gold. That's where we are in the market. 2 in the morning last night, woke up to it. Love it, man. The dollar drives to a low of 97.85. Check out the daily. Okay, we were lower. You got to a low on December 16th of 97.86. We got to 97.85. All right, just below that area. 97.85 was the low. We've popped a bit on that GDP news. We'll see if it holds, but the dollar continuing to look weak. Lower lows, lower highs. I mean, think about it. We get the 10-year yield right now sitting at 4.2%, okay? And the dollar cannot catch a bid. The dollar's as weak as it's been going back to almost the beginning of October, 2 full months. And meanwhile, we got yields pushing 4.2%. There's your 10-year, as I mentioned, 112.05. We jump over to the 2-year. And lower price as well. As, when are we going to get a cut? Is this data going to drive the market to be a little bit worried about cuts going forward? The Fed, we will find out. But the market this morning, reacting to the fact that the 10-year's at 4.2%. The dollar catches a little bit of a bid. We jump over the VIX this morning. A little bit of elevated price. How about a nice round number? 14 on the dot last night. Our man Basil Chapman. 14.42 right now. VIX up by 34 pennies right now. And let's jump over to gold and silver. So, as we get a little bit of a dollar pop, you got some gold weakness. Now, be careful in these metal markets, folks. I put a new issue of the gold report out this morning. Okay, I put a video out yesterday. There's new updates with the gold report every single week. If you're thinking about signing up for the gold report, folks, it's a great time to do it. Head on over to the front page of TFNN. You can still check out the Tiger Dollar sale on the front page of TFNN as well. Check out the gold report right under the newsletter tab. There it is, $119 a month. You can sign up there on the monthly. The 6 month, you can save $133. The yearly, $985. And so I put out a video update yesterday, and I put out the full report this morning. We have 3 active equities. 2 of those are in silver. All right, I'll pull them up. We got First Majestic, a heck of a run. We're trading right now at $17.85 from $17.52. Now, we got in First Majestic with an 11 handle, folks. So a little too late right now, I'd say, to be loading up. Endeavor's another one. You're pushing $10 this morning, okay? But taking a look at golds, we talked about it yesterday. Okay, you're coming in and you're getting above this area on lighter volume. It's very simple. You trade higher on 1.9 million contracts. If you have the book Time of the Trade, folks, the art of the time of the trade, pull it up. Pull up the chart, pull up the chapter on quality volume. Okay? We're breaking above this area without quality volume. Look at that volume on the highs. You did pull back on lighter volume. That was nice. You got a nice pop on the week of November 10th. But since then, we've had waning volume. Okay, and really we've had waning volume since that high of October 13th. And the bummer is that you're going to get above those highs, and you're going to do it on a holiday week on very little volume. Okay, we're trading at 4,500 right now on gold. Now, silver, different story. Okay, silver the last 2 weeks, remarkable strength. Okay, now you didn't break above this October 13th week, but on a 3-week basis, and then when you put this thing on a monthly, well, it would. Remarkable volume. Okay, silver continues to look strong. Silver, look at this. There's no weakness in silver right now. Look at this, man. Silver's up 3% right now, up $2. We're trading at 70.61. And then platinum. Platinum's up 7.3%. Folks, volume don't lie. All right, look at the run. We talked about it yesterday. Look what's happening today, right? Gold up by 0.6%. Barely positive. Silver up by 3%. Platinum up by 7%. Who's the leader? Platinum. Still not at all-time highs just yet, though. Platinum, all-time highs, we'll pull it up. How about 2008 at 2,300? We'll come right back, folks. Don't go away. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the fund involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got about 12 minutes to go until the start of trading, and we have markets right now slightly in the red with a strong GDP number. Now, what was also in there is you got the personal consumption expenditure price index, the Fed's preferred inflation gauge. That inflation gauge rising 2.8% during the period and 2.9% for core, which is going to, of course, exclude food and energy. Both were above prior readings of 2.1 and 2.6. So you have the PCE go from 2.1% to 2.8%, and you have it on a core basis go from 2.6 to 2.9. Ooh. Now, one of the areas, like we talk about here, whether it's exports, imports, okay, but the increase in exports and government spending. That's one. I'm reading CNBC out here. Now, increases in exports, government spending, and as I talked about, imports and exports, okay? And remember that first quarter number that was so bleak. And the reason why that first quarter number, folks, on GDP was so bleak right there was because imports surged. And now you have the import fall off. Now, it'd be interesting to see when we get into these numbers a little bit further. These numbers just out within the last hour. Is it a net export number that's big? And is that net export number driven by a decrease in imports, which could make sense on the tariff front? Nonetheless, strong numbers, but the PCE, a big number there. So we got a strong GDP number, and you have inflation, a problem, right? The Fed's got a bit of a conundrum, as is the case. All right, we stay with commodities. We jump over to crude. We hit a 54 handle last week. Catching a bid this week, though. 58.23, we just hit crude, trading at 58.03 right now. And yeah, the holidays travel season, gas prices to 4-year lows. Excuse me. Now, what's remarkable here is that inflation's a problem, okay? Period. Inflation's a problem. Folks, inflation's a problem when gas is cheapest it's been in 4 years. And inflation's a problem. That's one of the risks. And that's what the Fed's facing here. So we'll see if we get the cuts. But the 10 years at 4.2 right now. And we have very cheap oil. And still with cheap oil, you have a PCE, okay, that is up 2.8%. That's the headline number, which is going to include crude oil. All right, we'll jump back to gold. So as I mentioned, I put a new full report out of the gold report, folks. Covered 25 different equities, charts of gold, silver, platinum, 10-year, the dollar, the XAU, the HUI, charts on each of those equities in there. And I've been talking about it on my programs, but one of the things I encourage you to do, folks, is put a stop in place, okay? Some of the runs in some of these equities, folks, approaching parabolic, okay? Now, we don't have Hecla in the gold report. We have a couple silver equities, but not Hecla. Quite a stock, man. One of the strongest equities out there right now. Look at the run we had on volume last week on Hecla, right? Now, some of these equities had some big volume spikes on Friday, which is the case sometimes when you get the quarterly options expiring. Okay, it's happened on a couple occasions. You back it up. It happened in September as well. You look at that huge volume spike we had in September. Okay, that was options expiration in September. You get that number again in December. But it's real volume. All right, we surged higher on Hecla. The point being, though, folks, Hecla just traded from $6 to $21 in the span of under 4 months. 6 to 21. Okay? Eventually, we're going to get a pullback. And when we get that initial pullback, it's going to be substantial. Now, you say, okay, it's a heck of a run, but how does this compare over history? Well, check out this chart. Hecla's had some violent moves in both directions, right? 1987, it's a heck of a run on the silver run that time, okay? You got a second pop in 2023. You bottomed out at almost BK in 2000. You make a run up to the highs of 2008, pushing $13 almost, and by the end of the year, you were at $1. Oh, you do it again, up to $11, and within a few years, you're back to $1 or $2. Now, it doesn't mean it has to happen again, but you check out this chart, and if I showed you this chart outside of anything else, and I said, hey, do you think eventually Hecla might have a pullback? What would you say? Say, of course it's going to have a pullback. You say, this run is historic. Say, even with the runs we've had on many historical bases, it is a historical run to the upside, and it's approaching parabolic. Now, we got some volume, okay? But check it out. On a monthly basis, we had the volume in September when we got to $12. We're at almost 21. We're not at almost 21. We're at 21.08. Now, it doesn't mean you have to sell, okay? And I'd encourage you not even to sell. I'm not selling, okay? But pick a stop and don't give it too much room. Okay, if you've been fortunate enough to be in this equity and you've ridden it up since August and you're up, 250% since that in a period of 4 months, all right, don't give back $4 or $5. All right, this thing could test 14 like it's nothing. It really could. Sounds remarkable, but all this price expansion we got, that was a holiday week, man. That was Thanksgiving week. You did 64 million shares. Now, we had some nice volume on Friday. Okay, which is why you don't have to dump this equity, but pick a stop, draw a line in the sand. Okay, whatever you got to do to convince yourself that it's okay to sell some equities and take some profits. And I'm not telling you to sell. I'm not saying it's going down, but this is just simply a risk-reward scenario, folks. And historically, the mining equities have been very cyclical. Okay, my dad used to say, you hold the metal, you trade the equities, right? Because you look at the metal, Okay, yeah, you've had some historic runs, but guess what? On a longer-term basis, you're much well off. Okay, especially as long as you're just not buying some of these spike highs. Well, folks, look at this chart. Okay, we haven't had a pullback in silver since September of 2022. Now, yeah, we had some pullbacks, but September 2022, man, from 17 to 70. So keep your spikes up, get some stops in there. Okay, gold as well. I mean, historic run in metals. And listen, I think we got dollar weakness. Okay, even with the numbers today, we're catching a bounce on the numbers today. All right, but I think we got dollar weakness. I mean, think about the GDP numbers we just got, and the dollar's weaker than where we were yesterday. So the wind is going to be at the metals back. But boy, we're approaching some parabolic levels when you get the likes of especially some of these silver equities. So pick a stop, folks, draw it in the sand, and make sure you abide by that stop, because we're going to have plenty of trading opportunities in 2026. We're coming right back for the opening bell, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have the equities open and S&P's down by about 4 points, make it 3. We catch a bid coming into the opening bell after we traded lower on those GDP numbers. Now, talking about those GDP numbers again, digging into the journal, okay? And that's, you got to look at the whole picture here, all right? And I know, that it would be tremendous if the economy was growing at 4.3% over and over and over, okay? But that's not what's happening right now. There was a massive pull forward in imports, okay? And even the Journal, what they do is they say the data show the economy growing at an average annual rate of 2.5% since Trump returned to office. And that's even after the first quarter contraction as companies ramped up imports to get ahead of the new tariffs. The growth is on par with the 2.4% average pace in 2024. So we're at 2.4, we're at 2.5 right now. Yes, this number's a big number, okay? I was on the air, folks, talking about in the first quarter saying, hey, man, Trump doesn't deserve all this bad press of, everybody, the headlines just wrote themselves. And the import numbers were just massive during that first quarter, okay? I said, man, if you're giving them all the grief right now, then you're going to have to give them all the praise when those numbers get boosted in the coming months because all the imports got pulled forward. Well, here we are. Okay, so that number's not 4.3, but guess what? It's a big number. It beat expectations. And on top of it, we have the PCE going up at almost 3%. So, yeah, you better believe that's going to matter with the Fed. The next job number is going to be a big one when they can really benchmark, okay, the December jobs numbers versus the November numbers, et cetera. That owner's equivalent rent is going to be on there, though, for the next few months, benched at about 0. But nonetheless, so keep that one in mind. Okay, you factor in that negative because that was not a negative number. That was a negative number because we got a pull forward of imports. So factor that in when you're looking at the 3-month number because realistically, that's what would have happened. All right, we jump over to the Warner Brothers saga. Higher yet again this morning by 12 pennies to $28.88. We jump over to Paramount Skydance this morning, giving back 11 pennies to $13.50. Netflix shares up by 41 pennies. And we jump around. Let me get the right tab. One more try. There it is. Mr. Ellison. So this article from Bloomberg is a good one. And what it talks about is how it would reshape his fortune. Yeah, and it would be quite a concentration in a debt-laden media company when that is not how this man has built his wealth. It has been just focused and centered in Oracle. So he's taken out debt against his Oracle holdings. 30% of his stake is currently pledged as collateral. Okay, but the $40 billion personal guarantee for Warner Brothers could change that. Right now he's at about $252 billion. He's up $60 billion since January 1st. Not bad. Okay. So he has 30% of his Oracle stake currently pledged as collateral. Doesn't have to pay taxes on that, right? No paying taxes on that, taking loans. Why? Never sell the shares, folks, right? Just take loans against it and you never pay taxes, even when you make $60 billion a year. So the number of pledged shares total 69 billion, and he still has unpledged shares of 161 billion. Quite a piggy bank to loan against and pledge. Oracle's proxy statement did not disclose loan-to-value ratios on the debt, but said the company's board does not believe Ellison's pledging arrangements pose a risk since none are underlying margin loans. Nonetheless, that's going to change. He owns 40% of the company. 40%. What do you make, $90 billion that one day that it exploded higher on their recent number? And this is complicated a bit by the pullback that Oracle has going on. We jump over to Oracle today, down by another 1.1%. We've caught a bid from last week, but boy, it's been a heck of a pullback, man. And the one thing is we finally got some buying down here. Okay, you got some nice buying following their last earnings, but you were lower. But then you got a nice sign of strength as well on the 19th, but we really can't get above this area with volume. That's what you'd like to do. You're going to come back in here, and this is going to be an area you're going to run into now. 240, 220 to 240 to the upside. Oracle off by 1.3% right now as markets find a bid. We jump to chip stocks. NVIDIA in the positive by 0.3%. Microsoft in the green just barely by about 60 pennies this morning. Google shares up by 0.2%. Amazon up by 1 full percentage point. And Meta flat this morning. Some of the chip stocks. Micron, it doesn't stop, man. Look at this thing. Another high from Micron, up another 1.6% today. Broadcom, slight pullback. We jump over the semis, the SMHs. So check it out. We got some selling here in the SMHs. You had a nice sign of strength on the lows of November 21st, but then, boy, you got some selling with volume on the 12th, on the 16th. We bounce on lighter volume on the 19th, and then you bounce on lighter volume yesterday. Look at that volume yesterday. Just nothing. Put this thing on a weekly. Yeah, be careful of these semis, folks. Okay, it's been a heck of a run from the April lows, even from year to date. But we got some selling. We sell the week of November 17th. You trade higher on lighter volume. You give it up, and you get some selling the last couple weeks on the semis. We'll jump over to Tesla, up 0.25% right now. Check in on Bitcoin. Some Bitcoin been under pressure. We're trading at 87,000. You got recent lows out here. Well, that's the worry, man. Look at all this selling November 21st. Whew. It's going to be tough to break this area with volume. But I can't find a bid on this chart, folks, since 127,000. Look at this weekly. There's no strength on this weekly since 127,000. Okay, you jump around to some crypto equities, Coinbase, from 444 during that time to 243. And we got selling again. No real strength on this chart as well. Now, the thing about Coinbase, all right, we're off another $4.50. We're off 1.9%. You know, you're ever trading something like this, okay? And it's not quite catching a falling knife, but it's pretty close. I mean, you look at this head and shoulder, this would be the buy at 140, okay? But you can make the case you're back to a nice technical area. You're back to this strength from May, okay? You break below this area, and you're wrong, right? You break below these November lows. Boy, if you ever do it with volume, you're definitely wrong. But the low there is 231.17, so your back's against the wall here. You know, this area could turn into a nice area of support. We found a bid in January. You found a bid in June, right? That's where we traded to in the lows of November, and we're right back to that area in Coinbase. Now, the one I would not touch is MicroStrategy, folks. Okay, there's just too much unknown in that equity. Saying to a friend yesterday, you can wake up any day, okay? Not even wake up. It could hit the press at 11:30 in the morning that MicroStrategy's got an accounting problem, right? They have a leverage problem. Michael Saylor was great at financial engineering, okay? He pushed all the limits he could, and it got him in trouble decades ago with pulling forward revenue. Bitcoin's like the ultimate MicroStrategy, the ultimate financial engineering for the ultimate growth equity. And you're trading off 2.2% again this morning. Market's back in the green. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We jump to the home builders. Higher yields, not what the home builders want to see right now when you're talking about mortgage rates being everything. And look at this slide, man, not stopping. That's a daily on Lennar. We're down another % right now. We have a low out here from Friday of 105.23, and we're at 105.92 right now. Put this thing on a weekly. Whew. I mean, you got a low out here, my goodness, yeah, from their earnings of 102 and change, 102.53. You got a lot of buy in the week of November 17th. You come back down, test it. This is getting in the area. They're really on my radar right now. Okay. I look at where this market is positioned right now, which is higher yields, right? A lot of comments, rightfully so, in the den are, Powell's not going to cut. We're not getting any cuts until June, and maybe we don't. Okay, but that's where the market's priced right now. And think about it. So if the market's priced like that, then where's your risk reward? Well, right now, the market is priced on the heels of this data with yields rising, right, with the 10-year as well. Okay, even we jump to the 2-year. Quite a pullback on the 2-year, folks. That is quite a move. Okay. The PCE is the preferred inflation gauge. It's spiking higher. The economy is growing. That makes it difficult to cut. You better believe it should. When we got the PCE pushing 3%, what happened to 2%, right? We jump over the 2-year right now. We're pushing 3.56. Okay, that's a big move. 5 to 6 basis points in the morning on the 2-year right now. We were as low as 3.43, so we're almost a whole quarter point, a half of a quarter, 12 basis points. No, even more. Look at this. I mean, we're what? 43, 53. Geez. Yeah. No, 12 basis points off those lows. But that's a quick move over 6 days. Back this up even further. If the market's pricing in that we're not going to get any cuts until there's a new Fed chair, okay, then where's your risk? Because in my opinion, that's almost a worst case scenario right now for this market. Okay. I think pressure is still going to be on the Fed to potentially cut. And no matter what, we're going to start forward looking this market. Okay. And the market's going to start anticipating within the first couple of months of the year what the new Fed chair is going to do when they get their position in May. And they're going to be making speeches. And, it's a remarkable shift. You don't get a change of a Federal Reserve chair often. And think about the transition. It's so important when Chairman Powell speaks right now, right? It's so important because he is usually trying to forecast, not usually, every time he's trying to forecast where they're going with rates. It's not going to matter what he stops saying, because nobody's really going to care what happens in May if they can figure out what's going to happen after May, right? If the new Fed chair is out there and he's putting out verbiage, doesn't really matter, okay, once we start approaching that, and we'll start to be there in February or March at the latest right now. Jump over the dollar. And, we got a little bit of a bounce in the dollar, but think about where yields are right now. And on Friday, we were pushing 98.75. Yesterday, we're above where we are right now. The dollar is as weak as it's been in a week. Okay, we're still at 98, and that's with yields catching a bid. So even with the 10-year pushing 4.2, the demand for the dollar is just not there yet. Now, some of these equities, okay? Hecla, folks, is trading at almost yesterday's lows. Okay? Silver right now is well above where we were trading all day yesterday. Right? Silver's up $1.15. Okay, silver was at 68.50 a lot of yesterday, between 68.50 and 69. We're almost a full dollar higher. The point being is, okay, the move can be vicious in some of these equities, folks. Look at the open. I was talking about it at 9 o'clock before it even came in. Okay, look at First Majestic at the lows of yesterday. Silver's higher. These equities are a little worried. Any inkling that we're going to get a rip lower in metals, and boy, these equities. And I encourage you to think about it. As our man Dave White used to say, sell when you can, not when you have to. One of the greatest things I learned, and man, it took me like 10 years, maybe even 15. Right? It's always a learning process, so I'm learning every day. But one of the greatest things I learned, folks, is you don't have to buy the bottom and you don't have to sell the top, okay? You don't want to have to sell, right? The amount of money that you give back already if you're forced to sell, you don't have to sell at the top. There's going to be more trading opportunities. And I know I'm harping on it a lot this morning, but, man, it's so hard to pull the trigger when all it looks like is this market's just going straight up. And that's just not how it happens, folks. Okay? I mean, I was looking at Hecla this morning, writing the gold report, up at like 6:30 in the morning, finishing the gold report, looking at the different equities. And, I usually include weekly charts. Okay, I like the weekly. The gold report's a weekly newsletter. I pull up daily sometimes. We had some big spikes on Friday with options expiration, right? Look at that volume on Friday. Now, you couldn't quite close above the highs on Friday, though. You got above it. You gave it up. Tremendous volume with options expiration. But I'm looking at Hecla. I'm saying, man, this is getting a little lofty here. Because remember, folks, the markets are a representation of all of our fear, our greed, buying and selling, which is driven by fear and greed. And they're just natural emotions, okay? And at some point, when people have 300% returns, anytime you bought Hecla over the last years prior to August 1st, you're sitting on almost a 300% return. So pick a line in the sand, because even today with silver higher, these equities are reacting. Now, gold's pulled back. Okay, gold's not quite higher. You're $15 higher, but you're right back to the highs of where we were intraday yesterday. But silver's higher. 69.73, and platinum leading the way, still up 7% at 22.36. Jump around to some other gold equities. Agnico Eagle up by 0.1% right now. Alamos has been a strong one, up by 0.3%. Check out this chart. Look at that. But again, just getting a little bit overextended. You can see this channel line going back to 2024, right? Occasionally go under it. It was well defined up until October of last year. You get above it, you get below it, you get above it, you get below it. We're above it right now, up by 0.4%. All right, we got markets back in the green. Stay tuned, folks. We'll come back. We'll take a look at the heat map as we got consumer staples in the red. Walmart off by 0.7%. Coke off by 0.7%. Oracle again in the red, off by 2.25%. AMD slightly in the red. Google up by 1%. All right, folks, one more segment. Come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps up by 8 points right now. Now you take a look at the volume. Okay, we had some selling these 4 days. December 12th, that was a Friday, and then Monday, Tuesday, Wednesday, you get a pop on a little bit higher volume, but look at the last couple of days. All right, Friday, 1.2 million contracts and 930,000 contracts yesterday. So the volume, as expected, folks, it's December 23rd. Okay, fewer market participants doesn't mean you might not get the volatility, but right now we got rising prices on lighter volume. And take a look at the VIX, though. This market's saying, we'll see you in 2026. We just got a low of 13.99. Okay, so I know it looks like this market's a little worried. The VIX is not saying that at all. Now, this data is so old, we're not used to getting data that's this old. You add in the whole import volatility into it. Be careful on using this data as the holy grail of why the Fed can't cut. Okay? This report was originally scheduled for release on October 30th. It's about to be December 30th. This release also replaces the second estimate of GDP, which we were supposed to get November 26th. Even that's a month ago, right? So the estimate we just got is now replacing the second estimate that we were supposed to get a month ago. It's very old data. The Fed needs some new data, right? They were even reluctant to rely on the November jobs data. Yeah, we got gold pulling back. All right. Even with a weak dollar right now, gold's a little bugged out. Okay, we're $50 off the highs. You got the XAU negative by $1 right now. Silver up $1. Doesn't mean you got to trade, and I wouldn't trade. They look strong, man. Silver looks remarkably strong. Don't have to sell, but pick a line in the sand and draw it and get it in there and stick to those stops. We got a VIX near 14. Folks, stay tuned. Basil Chapman, he's coming up next. I'll see you at 3 o'clock for the Tom O'Brien Show. Have a great day.